Okay, so let me know if you can see my presentation. You should be seeing a title that says Dealer Due Diligence. Who's working for whom? Which is really the question that I'd love you to think about while we go through this presentation. And part of the reason why I'm passionate about this particular subject is that as Forex traders and traders in any market are kind of faced with this dilemma where there's very little that we can do, or there's very little that's under our direct control. So it's always a good idea to maximize those things that are in fact in your control. And choosing a dealer and working with a dealer and how you work with the dealer is entirely in your control. Now, I think that there may be some traders, especially new traders, are wondering, well, why is it so important to do so much due diligence on a dealer? I mean, should my due diligence or should my investigation of a dealer go beyond whether or not they offer lot sizes and dealing spread that's acceptable to me? What's the point of going on beyond it? And one of the things I always refer to is for those of you who know Nicholas Taleb or have heard of Nicholas Taleb, he writes a lot about statistics and as they relate to finance. And one of the things that he always says is, well, if the worst case scenario is unacceptable, then don't take the risk. So somebody's already kind of popped the bubble here. I always point out Refco as, that was a company that everybody felt pretty strongly about, including myself. I'd recommended Refco many times before, of course, the scandal and they started to go under. But there are ways that we can deal with this, and dealer due diligence is something that I would suggest is not only something that you do before you start working with a dealer, but it's something that you do continuously. So it's something that I do on my dealers on a regular basis. I check up on them, and from two perspectives, and I'm going to talk about those two perspectives as we go through this presentation. So one of the things that I wanted to clear up here, and an interesting something that I find interesting anyway, as somebody who's been in the business for a long time, I've consulted for dealers on from a marketing perspective. How do they market their products and services more effectively, etc.? How do they improve the value of their existing accounts, all this kind of thing. And so in the years that I've been doing that, I've learned some interesting things about how dealers market and why they market the way that they do. And right now we're seeing, because times are tough, and Forex dealers, brokers, etc., and everybody in the financial services industry that's not quite the fat city that they were in here over the last 4 or 5 years. So things are changing on them in the market, the dynamics in the market, and so their marketing is also changing. And I think that it's important for traders to kind of work through the marketing, if you will, and start digging into the details behind what's really going on and why. Now, one of the things that I want to suggest here is that I do presentations with FX Street on a monthly basis, and I don't typically have a presentation, actually, a PowerPoint presentation, that is, but this time I do. If you would like to have a copy of it, I'd be happy to share it with you. I do have a couple of links in the presentation. So you can send me an email. It's just john@learningmarkets.com. You can see the name of the company down here, learningmarkets.com. You can get you can ask me for a copy of the presentation. I'd be happy to send it to you. So one of the things that I wanted to make sure that we had kind of talked about before we get into how we do due diligence on a dealer is, why is it different doing due diligence on a Forex dealer versus the same kind of investigation that we might do on let's say a broker dealer, somebody that we were buying stocks and options or trading bonds with. And I get this question all the time, and it's interesting, actually. I find that a lot of traders get married to their brokers. They get really defensive when you talk about one broker versus another. I try to stay as impartial as possible and just deal with the realities of what is the broker, what is the Forex market, and what is the broker's relationships with the Forex market. So let's talk about it because it will change the way in which you do your due diligence. So I find that there's really three ways that the Forex is traded most actively. The first is with futures. The first that I'll mention rather is futures. Now futures are currency futures have been available since the 70s in the U.S. Chicago Mercantile Exchange. They're still available there. They're a really attractive product. They're superior to spot forex in some respects, and inferior to spot forex in other respects, such as flexibility and such. And in the case of futures, you would do your due diligence in many of the same ways that you would look at a forex dealer, but typically when you're trading currency futures, you're probably trading them in the United States. So you would be doing your due diligence in, or your broker dealer, regardless of where you are, your broker dealer or your futures broker would be in the United States, and so you'd be doing your due diligence in the United States, and that's typically one of the biggest differences that I find between them doing investigation of them versus looking at a spot dealer. The second is the interbank market. And there's much buzz about the interbank market versus the spot market where most retail traders are working. Now the interbank market, I don't think that there's this number here of 1,000 banks kind of connected together trading with each other, 1,000 banks and entities trading each other. That's not accurate, but I think it's a reasonable estimate. There's probably around 1,000 banks. Of the 1,000, there's probably about 25 major entities in the interbank market. Now, what's interesting about this is that you'll hear that forex brokers or forex dealers advertising interbank access, and they do this. They try to tell you that there are a number of advantages to this, and there are some advantages to the products that they're offering that are misnamed interbank access. If you really actually did have interbank access, you're doing it either through EBS, which is an ICAP-owned software package that was built by the major players in the interbank market to be able to share pricing and to deal with each other, or the Reuters D2 platform. So if you're dealing with either of those two, which your Forex broker or your Forex dealer probably is, but if you're dealing with either of those two, then yeah, you have access to the interbank market. If not, what you're really getting is a version of OTC, or over-the-counter order processing. And there are two different versions of this. One of which that kind of gets at the interbank market, and the other one that doesn't. So let's talk about that. But it's the nature of the fact that the Forex for most retail traders is in fact over the counter. Whether they advertise it as interbank or not, it's over the counter, and that presents some interesting dynamics. So let's take a look at what this actually is. So when you're looking at the way that Forex dealers actually work, there's really two ways in which they clear orders, if you will. The first one is called, I find a term that's emerging for this kind of dealing is called straight-through processing, which means that what they're essentially advertising to you is that they are not the counterparty. So if you're working with a dealer that's offering straight-through processing, they're not taking the other side of that transaction. If you're buying the Euro USD, then you are they're not the seller, if you will. They're sending you through to the quote-unquote interbank market. Well, straight-through processing is different than OTC, and you can see down here on the far left, I've got three diagrams here, and on the far left, I've got one that's straight-through processing. This is what they're kind of marketing: is that there's all these interbank participants up here, these IBs. Interbank is what IB stands for interbank here. And the idea is that they're trying to send your order to the interbank participant that offers the best price for that particular order. That's kind of the marketing. That's the implication that they give you for straight-through processing. In reality, what's really happening is that typically the dealer is sending that order flow to one or maybe two participants in the interbank market. So what happens is that regardless of whether a dealer is sending you straight through to another interbank participant, so for example, let's say that they're sending their order flow, including your order flow, to Deutsche Bank, who's an interbank participant. Either way, you're either dealing with your Forex dealer's dealing desk, or you're going to be dealing with Deutsche Bank's dealing desk. Now, the advantage, obviously, with this straight-through processing, or the marketed advantage of it, is typically that they can offer tighter spreads, and we're seeing those expressed as fractions of a pip or taking things out to the fifth decimal place. or the third decimal place with yen quoted pairs, and or just demonstrate or just showing the spread as a fractions of a pip, which I think that's a real advantage, but should probably be offset against the advantage of fixed spreads, which is what you typically get with this kind of a dealing desk, where your dealer is acting as the counterparty to your transactions, and there's still a lot of these guys left, where essentially they're getting their pricing from the interbank market, but they're not sending your order through to the interbank market. They're trading against you, which sounds bad, but it's really not necessarily bad. It really depends. So they're taking the other side of that transaction. Now, what I find really matters, and the reason why this is part of due diligence, is because I think that this is the best example that I could come up with for why it's really important to just dig through the marketing. Just leave because there are a lot of representations that are made by every dealer out there that aren't necessarily, they're kind of, I don't know, in the marketing business you would call it puffery. It's not exactly a lie, but it's not exactly true either. So what we have to really think about is, when we're doing our due diligence, is don't worry about the marketing, because ultimately you're probably getting very equivalent pricing and very amongst the largest and the best dealers, you're getting a very similar offer, whether they offer straight through processing, quote unquote interbank, or whether they're the counterparty and they're offering fixed spreads. But it's important to kind of contrast those and to see, well, which one actually matters to me in my trading style. Maybe if you're a really short-term trader, it makes a big difference, that tighter spread. More longer-term trader, you just don't want the spread to get widened on you and get stopped out because the spread suddenly got really wide during market liquidity. So the other thing I would mention is, it's always nice to, I think one of the advantages of having a dealing desk at the broker is that you have the ability to talk to a dealer who actually is dealing. Versus if you've got a dealer who's straight through processing, you may not be able to access somebody who does anything or who has anything to do with processing those orders. And then, product breadth, obviously, a lot of dealers offer, because they do work over the counter, they offer a wider product line. And then, of course, for those who, I'd say the counter to this is, if you're getting straight through processing, you're probably getting a slightly tighter spread on average. One of the things that I would mention is, and this one's more of an intangible when you're researching your broker, is that it's almost a matter of, I started out this presentation with the subtitle that said, who's working for whom? And I can tell you from the other side of the business. So what I like about the fact that I've never owned a dealer or been employed by a dealer, but in fact have consulted for dealers, is that I can have been able to see how the different dealers make their money. So what is it exactly that, and this goes for brokers as well. So what is it exactly that makes them their revenue? And the easy answer is, of course, the spread. The dealers make their money off of the bid and ask spread, where ideally most of that is going to them, or a portion of it is going to them. Maybe they might be splitting it with their interbank participant, or with an IB that introduced you in the first place. But you could chop it up into two categories. There are two kinds of accounts that make money for a Forex dealer. And this goes for any broker or dealer. The first category, and they're much more numerous, are small, active traders. So they trade a lot. Now, very, very few of them make any money, but they trade a lot, so you get that trading frequency. And in fact, when analysts are looking at broker dealers, in the public market, so they're looking at broker dealers who are publicly listed as stocks, one of the things that they will look at are how many transactions per account do you see per month. And when that number goes up, that's something that their share price is rewarded for. So one of the things you have to really think about is, well, am I in that category? Because if I am, I need to really assess the realities of being in that category. Hardly any of them make any money, and it's very difficult. And really, I think one of the most effective transfers of wealth from the retail investor to the institutional world I've ever seen, next to whole life insurance policies, maybe. So the other kind of account that makes money for a broker dealer, and this goes for Forex brokers, are large accounts. Now they may be actively traded, of course, but meaning day traded or something. But the larger the account goes, it's typical to find their transaction volume goes down. I don't think it's a coincidence. But the broker dealers, they typically make money on their balances. There's very complicated financial transactions that they can engage in to essentially make some money off of those balances, and the position sizes are larger, so typically they're making a little bit of a spread on the rollover and things like this. So it's really a matter of understanding, well, what kind of a dealer am I working with? Is this a dealer that's maximizing type A of an account or type B of an account? And typically what you'll find is the better service is from the type B, because they're incentivized to try to increase the longevity of those accounts. So they want those accounts to last for a really long time. So their service is going to be oriented around that kind of activity, versus a dealer who's trying to maximize type A accounts, those who are fairly small and actively trading themselves, typically trading themselves out of the market, are going to be focused on providing services that incentivize over trading. So you'll see a lot of systems being promoted and offered. You'll see very easy order entry, which is not necessarily a bad thing. It's just a matter of knowing what you are and what your dealer is. And then finally making sure that that our fees and service levels, do they change? Because if I work with a dealer who's really oriented around the active small trader, there may be actually fees and service charges that I wasn't aware of. A classic example actually is that I've seen, for longer-term traders, I would include myself in this category, I may hold a position for several months, and when the market gets really crazy, I may those positions may not be actively managed. So in other words, I may not get in and out really fast. Well, there are minimums being charged by a lot of dealers out there if you're not trading actively enough, and it's something that needs to be investigated and asked as part of your research. Okay, so let's talk about, besides kind of looking, what I've talked about so far is looking a little bit inward. What kind of a trader am I? Does that then, can I use that as a framework that I use to investigate my dealers? But now, what can we do to look outward to impartial parties to find out a little bit more about what's going on with my particular dealer? Now, some of you in this audience, I know, already know about the fact that a lot of dealers, broker dealers, have to be registered with financial services authorities out there, and you know where to get that information. However, based on the feedback that I get when I do a presentation like this, most people don't. So they're not aware that in most countries, we're kind of fond of saying, or most major financial centers, I would say, the regulation is required and registration is required. And you can get transparent access to that information. And I have an example that I'm going to show you. Now, I've got three listed here. I've got the NFA Basic System. That's in the U.S. You can find information about Forex dealers that are registered in the U.S. There's one in the UK, the FSA Financial Services Authority, and then the Australian Securities equivalent to the NFA, if you will, in Australia, and I've got links to those. Now, so I just got a question, what about the Swiss ones? That's a great question. The Swiss do have, obviously, as you would imagine, a regulatory entity like the NFA, the FSA, the ASIC. The problem is that it's not very transparent. And that goes to number three is, where are they domiciled? So where are they? Are they in the U.S.? Are they registered in the U.S. and in the U.K.? Can I look them up in both places? And in Australia? Can I look them up in all three places? And the great thing about these three examples is that these registrations are very transparent. I'm going to show you an example right now. The issue that I found with the Swiss registrations is that it's very difficult to get any information about Swiss dealers. So part of that is, as I've got somebody chiming in on this, about the registrations. You have to be. It's very similar to the way they license a bank. It's almost, in fact, exactly the same. The issue really is, can a retail person from anywhere in the world go find information that's as detailed as they could from these other three? And typically, no. So it's something to be really careful about. It doesn't necessarily mean that you don't do business with a Swiss dealer. It means that you have to do a little bit extra work to find out, well, not only are they registered and do they comply with the registration requirements, but do they also do they have any problems? Has there been any complaints, and what's the nature of those complaints or lawsuits, etc.? So what I'd like to do is actually take a look at the NFA one, which I think is actually the best one as far as transparency, and you'll find most dealers are, well, maybe not most, but 70–80% at least around the world have some registration in the US and therefore are going to be listed in the NFA basic system. So I'm going to stop sharing my screen for just a second. And okay, and I'm going to be sharing my web browser, and I just want to make sure that you can see that. You should be looking at my web browser. It says NFA, National Futures Association Basic. Okay, great. And this is, by the way, this is just an example, and what I'm going to do is on purpose. I'm sure a lot of people are going to be like, oh, hey, maybe he'll spill the dirt on a couple of bad dealers. There are some bad ones, by the way, that are still in existence and have lots of complaints, and yet continue to operate. And so it's really important for you to check them out. But what I would like to encourage you to do is to investigate them on your own. And I would do two things. So when I'm doing research on a particular Forex dealer, I'll do it by name. So and I'm going to kind of cop out here a little bit by using the firm name Ouroboros. That's actually I'm a managing principal for a CTA, which is also required to register, just like a futures commission merchant, which is what a dealer would fall into that category. And so you can look them up not only by their name, but you can even look them up based on who's calling you. So one of the things I always look for is, does the person who's calling me and making representations about their services and products, are they registered with the NFA? Who is this person? Should I be nervous about them? I got a call a couple of years ago from a guy from a very reputable dealer. I looked him up on the basic system, found a bunch of complaints. He'd worked for several other dealers and futures brokers at the time. Called the company and talked to them about, well, what's the issues with this guy? He's got a lot of complaints. And they were completely unaware. So it's really not something that you can rely on someone else to do your work for you. So for example, I'm going to type in my own last name, Jagerson, here, and you'll be able to you could find me and find out, well, okay, so what complaints have been lodged against John Jagerson, for example, or against Joe Blow, whoever is calling you. So what I would suggest is to check it out on your own. If you find this an interesting thing and you haven't done this kind of research on your dealer, type them in here on your own and find out for yourself. You might find something very interesting, and if for no other reason, there's lots of little complaints and things like that you'll find on most dealers, and most of them are nominal, are not a big deal. But it gives you a really good thing to call your broker about and demand an explanation, because remember who works for whom. Okay, so I'm going to stop sharing my screen for just a minute here. I'm going to go back to my presentation. Give me just a second here. Okay, so you should be able to see my presentation again. So let me know if you can't. So the takeaway here is I wanted to do a little bit of a case study on my company, Ouroboros Capital Management, which is just a CTA, by way of demonstration as to how available that information actually is. The rule of thumb that I always say is, look, if the information isn't easy to find, then don't mess with it. There are so many other fishes in the sea that there's no need to really have to stretch very much to find good information about who you'd like to do business with. Now, I wanted to do this presentation on doing due diligence on a dealer and doing continuous due diligence on your dealer. However, I would do the exact same thing if I were considering an advisory service. So if I were buying an expert advisor system, or if I were doing business with an IB, registration is also required for those kinds of companies. So if you're going to do business with a company that's getting compensated based on your trading, or based on signing you up for an account or whatever it is, they should be registered, and you can find information about them. If they're not registered, back away immediately. So now, by the way, there is, in the United States, there is another easy to get piece of information out there called the net capitalization requirements, which means that the CFTC, which is the government entity, the NFA is actually an industry association. The one we were just looking at when we looked at the NFA basic system, that's an industry association. Good source of information nonetheless, but that's what it is. The CFTC, however, is the U.S. government entity that manages futures commission merchants like Forex dealers. And one of the things that has recently been, for all intents and purposes, they have a minimum capitalization requirement of $5 million. Now, however, one of the things that's really important to understand here is that that's just the minimum. That doesn't necessarily mean that that's the actual that they will be required. So there are, in fact, a lot of dealers who have higher reserve requirements or net capitalization requirements. So one of the things now, the great thing about this is that it's really easy to get that information. At cftc.gov, it's one of the most actively used links. You can find information about the capitalization of your dealer. And you can contrast that capitalization, so how much money do they have, if you will, versus other dealers in the market. So you can kind of contrast, where are they at. There's great example here. I've just had somebody chime in on a list of some of the capital available for several Forex dealers, and you can see kind of the spread here. Now, there are once in a while you can find little warning signs. When the net capitalization requirements were increased several months ago, there were suddenly, overnight there were a lot of dealers going out of business. So it's important to, I always say, one of the things to look out for is if the company is undercapitalized compared to its industry, then maybe you need to do a little bit more investigation, or perhaps just avoid the whole thing completely. Now, one of the questions I get all the time are, and I'm going to cop out on this one again a little bit, because there are some really bad rating services out there, really bad rating services out there, but there are some really good ones too. So I've got two listed here that I find are my favorite. The first one is forexdatasource.com. If you're not familiar with them, I'm just going to type the URL here in the window here. Whoops, forexdatasource.com. And thanks for everybody chiming in on the links here. These are really helpful. I'm sure everybody's going to appreciate having access to a lot of this stuff. And this is all stuff you should be bookmarking and understand as a member of the Forex business. As an account holder, you need to know what's really going on. So I mentioned that there are rating services. There are. And in this case, I've got two that I've listed. There are specific reasons why I like them. ForexDataSource.com is independent. They're not selling any advisory services. They're not in bed with any brokers. They offer very, very detailed reports on most of the large Forex dealers, including net capitalization, how they compare capitalization-wise versus their industry and versus their requirements. How their ratings are superior. So you can go there and rate a dealer that you've worked with on a number of categories and criteria, and get some information. I am continuously surprised at who pops up at the very top of those lists. Traders.com, also, for those of you who subscribe to Technical Analysis of Stocks and Commodities magazine, Traders.com is their website, and they have Reader's Choice that comes out every year, where Forex brokers and dealers are rated by the readers of that magazine. It's been around forever, early 80s when they started publishing it, and so pretty good pretty good ranking of dealers. It gives you a good starting place. To get that Reader's Choice report costs about $5. It's well worth the time. It's well worth the expense. And then also forums. But this is where I would put a lot of caveats in there. I've seen a lot of forums that rate Forex dealers, but a number of them are actually just more or less scams themselves, trying to slam on everybody else in preference of their own offers. So you have to be really careful about what you read in forums. Not to mention the fact that inevitably, when you're looking at forums, what you're going to get is a lot of complaints. So I always look for forums that so you have to look at it with take it with the proper frame of mind. I always look for forums that are not affiliated, they're not selling a club or trading advisory, and they've been around for a long time. So typically, if they've been around since the late 90s, that probably some of the information you find there is probably reasonable, if biased to the negative, which inevitably they will be. So the one thing that I think actually the kicker, if there was any one thing that I would suggest for a Forex trader to do as part of their due diligence and to do on a regular basis, it would be this list right here. Number one is check the product line, make sure that it matches your needs. So, for example, if you're a longer-term trader and the tightest of the tightest spreads is not a very big deal, then you are probably looking to prioritize other offered products that are different than super tight spreads. So always make sure that the product line matches the way you trade. If you're a super short-term trader and tight spreads is all that matters to you, then that's the priority. It's a matter of really making sure that your research matches your needs. The second thing is, of course, and this one's logical, is paper trade the platform at least 30 days. Because you'll find out a lot of little things. Within 30 days, you'll get a lot of active and unusual market conditions that you can really see how does this trading platform perform with me, perform with the software that I use, my operating system that I use, the gear that I have, and my own attitudes towards the market. The third thing that I always suggest is, and I have to recommend this really strongly, is to paper call customer service. Now make sure that your dealer that you're investigating allows you to call customer service, because some of them don't. Unless you have an account, you can't access customer service. For me, that is a huge red flag and an immediate I won't do business with this particular dealer. Make sure that you can talk to them on the phone. You may not ever want to talk to them on the phone in reality, but you'll learn a lot just by talking to them. You'll get a feel for whether or not they have any idea about what they're doing. I would do at least 10 calls. So they have to give you information, the ability to talk to their customer service number of times so you can really get a feel for what they are. I always suggest, call in the off hours. So call like in the middle of the break between the New York session and when Asia starts to open. Call during those times, so at least 4 times, and start asking funny questions. You may know the answers to all these questions, but ask them to explain rollover to you or tomorrow next or whatever they call it. Why is there a gap from Monday to Friday? Explain your capital reserves. Why should I not be concerned that you only have $8 million in the bank versus Joe Blow, Forex dealer who has $100 million in the bank or $100 million registered with the CFTC? You probably know the answers to those questions, but ask them, because what you want to make sure is that they know the questions, the answers to those questions, and ask them all the time, because it's something that I continue to call my dealers and ask them these kinds of questions, and they think I'm just some stupid Forex trader who doesn't know the answer. But it's not that. I'm checking them out, and I have found oftentimes they don't know the answer, and it's a big warning sign. So and of course, always ask their opinion of other dealers. Some of them won't say, but most of them will, and then check it out. Check out what they say. What's the problem? Go call that other dealer and find out whether that was true or not. Because again, if they're lying to you, that may be a big red flag. Finally, the last thing that I always say is, and this is the one that I find people are a little bit more reluctant to do this, and I think it does require a little bit extra work on this part of the trader, but I always suggest to diversify your dealer. So once you've done all this investigation, don't waste it by marrying one dealer. And I think the great example is Refco. On paper, Refco looked really good. From a investigation standpoint, they seemed fine. There wasn't really any big warning signs until very close to the end. So they went downhill very, very quickly, which is one of the reasons why I always say, make sure you do your research on a regular basis. But spread the risk around. There's no disadvantage in my mind besides that it takes a little bit more effort to manage a couple of accounts versus one account. To diversify your dealer, I find a lot of traders are always looking for even omnibus account offers. Somebody that they can work with forex and futures and options and stocks. I think that's a bad idea because if one of them were to go out of business, you can't eliminate all risk. And the alternative, the worst case scenario of a forex dealer going out of business is that you lose the money you had on deposit, all of it. So if you can spread that risk around a little bit, then maybe that happens every 5 years or so, but it just won't happen to you because not all of your money was with any one dealer. The first signs of trouble get out. I think Refco is the greatest lesson of this. When the news first started to hit that the CEO was in trouble, a lot of traders got out very quickly that day. And I think that was probably wise. There's no reason why you need to give them the benefit of the doubt. They work for you. If you had an employee that you had any signs that they were cheating or embezzling, you'd fire them immediately. And I would do the same thing with a dealer. And continue to paper call and watch the service levels, because if they dip, it's a big warning sign. This is something that I do all the time and have switched dealers because of it. How much does a wire transfer cost? $25 or something like that. Really changing a dealer isn't very expensive, doesn't take all that much effort, and keeps you fresh. Makes sure that you're being exposed to the latest and greatest in the forex market. So this was a little bit different presentation. I hope it was a nice change of pace. I find that it's surprising how few people are really thinking about this kind of thing, and until it's too late. And it's not just a matter of avoiding those dealers that are going to go out of business on you. That's really, really rare, and I think that's probably the worst case scenario that we always think about. But it's really a matter of, am I going to get involved with a dealer that is going to be an unpleasant experience for me as a trader? I find I'll share one cautionary tale with you. I was working with somebody. A friend of mine is involved in the forex, switched dealers, didn't do a lot of investigation, and wound up putting in an order because the dealer default system was, it seems like it was, I want to say $5 million was the notional value on an option contract, and which was much, much larger than they ever trade. And it burned them really bad. So it's something that come to think of it, it was $1 million notional value was the default, but they hadn't done their investigation like they needed to do. And as a result, they got burned to the tune of about $1,000 once they jumped in and out. Terrible service. Was never able to get a satisfactory resolution to it, and learned the lesson to always test everything and do their research. And it really had nothing to do with whether that dealer was going out of business or not. It was more a matter of, do they accommodate the way that I trade and the needs that I have? So I appreciate everybody's time and attention today. I think this is, we're starting a brand new year here in a couple of days, and this will be interesting. Is it going to be the year of the dollar, or is it going to be the year of beating up the dollar? I think this is going to be a fun time to see how this whole crisis that emerged in 2008 really begins to work itself out in 2009. And I hope everybody has a great new year. Looks like I've got a couple of minutes before I'm out of time, so if anybody has any questions, I'm happy to clarify anything. So Boykey's asking if the forex is a zero-sum game. I would say yes, that it is. So keep that in mind. It's there's as many losers as there are winners at the least, and there's a very small concentration of winners. That's my opinion. But I think that it is very reasonable to expect to be in that small percentage of winners. It's just a matter of acting appropriately, doing your research, trading the way that puts the odds in favor of your trading and survival, and you should do fine. Okay, so asking for my email, you're welcome, by the way. I have no problem answering questions or whatever. You can send me emails. There's lots of information on my site, so learningmarkets.com, tons of education. It's all free, no obligation and anything like that. One question, I'll answer this question, then I probably better sign off. Will recession reduce transaction levels in the FX market? It already has, and I would suspect that it probably will continue to do that. And this is one of the reasons why you're seeing some new marketing campaigns out there from the dealers as to they're trying to get new accounts because transaction volume is dropping. Not for everybody, but for most across the board. On average, it is. It kind of depends on who you are and what kind of accounts you've been aggregating. But yeah, I expect recession will continue to affect transaction levels, which may in turn start squeezing dealers on the fees side or the spread side, the commission side. So just keep that in mind. If you start to see any rumblings about that with your dealer, that may be one of the things you use as an excuse to do a little investigation on some other brokers. Okay, thanks everybody, and have a great day trading.